What would your retirement look like if you saved up $4 million into your retirement accounts? What lifestyle could you afford? What would retirement look like? I've got the math on that, 3 different ways. That and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. How much are you currently on track to have saved up by the time you get to retirement? Do you know where you stand? Or maybe differently than that, do you just have a target? Are you thinking, well, if I get to 1.5, I'm ready. If I get to 2 million, I'm ready. Well, what if you had saved up? What if you've been super disciplined and been really focused, had a fantastic investment strategy that you rode through during the highs and the lows, and you were able to amass and save up $4 million by the time you got to retirement, say in your early 60s? What would retirement look like? Seems like a significant amount. There's a lot of studies out there as to what the average person thinks they need in order to have a comfortable retirement. That number right now, many people are thinking to around 1.5 million. Guys, it's based on your specific situation. Everyone's financial situation is wildly unique, very different, and therefore, objectively, it seems like, well, no, just based on the amount that someone has saved up, that should be able to tell us whether they're on track or not. No. It's all 5 factors, and one of those factors is how much do you have saved up. But whether 4 million is a goal, whether you think you're on track to reach 4 million, what would retirement look like? How much lifestyle could a $4 million portfolio afford you in retirement? Well, I'm going to calculate that in 3 different ways. Okay, 3 different ways. They come up with 3 very different numbers, by the way. And the first one is the most common way that we approach, and most of our clients prefer to approach their nest egg and the lifestyle that they can generate off of that nest egg. And it's a comprehensive financial planning approach looking at all 5 factors of retirement. But if you were to kind of summarize it really succinctly, it would be a sustainable withdrawal method. And yes, you need to build out that 5-factor plan. You need to go through all of those variables and make sure that the retirement plan has high confidence, and then you stress test it to ensure that you're on track. But from there, you then work back into, all right, well, what's the income plan? What's the income strategy? And you've probably heard of the 4% rule. As a financial planner, you don't just ascribe to, oh, well, it's that easy. No, you've got to stress test it and so on. And there's been all sorts of sort of debate with the 4% rule. Is it still applicable today when dividend levels are so low and when there's this much volatility and risk in the stock market? And so I would say, based on that 5-factor plan, a sustainable withdrawal method might be somewhere in the 3.5% to 4%. And the thought here is, if your investments diversified return can average somewhere close to 8%, 7.5%, 8% for a diversified portfolio, maybe taking medium risk in retirement, then what if you withdrew half of that? And what if you left the other half in there to continue to grow and compound your investment portfolio? Because during the negative years, you'll withdraw that 3.5%, 4%, but your investments will go down 5%. And so what's that look like? So let's just say 3.5%. If you did that 5-factor retirement planning and 3.5% was an appropriate sustainable withdrawal level for your portfolio on $4 million, that's about $140,000 for the year. So call it 12 grand a month. Okay. And if you were just to ask me without running some of these numbers, I would have said, yeah, that seems sustainable. Now, if you think, 4% rule, the math and all of that supported that. That's 160 grand. So a little bit more than $13,000 a month. But that's the range that you're looking at. That's the sort of lifestyle that a $4 million portfolio could afford. Keep in mind that is a gross number. You need to have tax diversification. You need to be aware, is that all pre-tax? Is that all after tax? Is there a combination? Is there qualified dividends? That's a gross number, so you got to pay taxes out of that. But then also, this doesn't include Social Security or any other retirement sources of income. So $12,000 a month or so, $12,000 to $13,000 approximately on that sustainable withdrawal method. And the second way to look at what a $4 million portfolio could afford you in retirement is sort of the traditional or old way of thinking. Few people use this approach today, and that is just, I want to live off the dividends. I just want to live off the dividends. Personally, I love this approach. I absolutely love it. However, when you look at the dividend yield right here of the S&P 500, look at this marked change thanks to the internet. I'm going to blame it on the internet, okay? Prior to 2000, it was very popular for companies, listed stocks, to pay a dividend, and there was this I don't know, a kind of sort of brazen pride, like, yes, we're paying a dividend and we're growing our dividend. And that all shifted. The thinking shifted to, wait a second, if there are profits, if there's cash flow within the company, business can either pay that out in a dividend, and investors might like that, or we can reinvest those dollars, keep those dollars in the company, and we can either buy back shares, or we can use those dollars to grow the company value and have more appreciation of our stock. Things have shifted, guys, dramatically, and I don't think it's ever going back. I could be wrong. I don't think it's ever going back. So right now, the current dividend yield in the S&P 500 at the time I'm recording is a mere 1.27%. It hadn't been below 3 for consistently for any period of time, really, up until 2020, and now it's bounced between that's 1.25% and 3%. I would say it averages around 2. Okay, but if you just said, I want to invest in the S&P 500 and just live off the dividends, a $4 million portfolio at 1.27% dividend yield, it's just 50 grand. It's just 50 grand. And you can see why, even though this makes a lot of sense and I love the approach, people aren't using it anymore because it's just a very, very limited income that you'd get even on a $4 million portfolio. If you wanted to take this approach and just live off of the dividends, you might say, well, 1.27 isn't appropriate, it's not enough. Is there a way that I can still get the S&P 500 but maybe overweight higher dividend investments? Yeah, they call this dividend aristocrats or a dividend focused strategy. Most of those aim for double the yield of the traditional S&P 500. Now, you might not have as much growth as the S&P 500, but your yield is going to be higher. I was just looking at one right before this video, and yeah, around 2.6%. So basically double that 1.27, so about $105,000 a year. Now you're at least in triple digits on your 4 million, but still quite a bit lower than that 12 to 13,000 a month that the sustainable withdrawal method would yield. All right, finally, the third way you could approach what lifestyle could a $4 million portfolio afford you in retirement is to simply take the I'm going to spend my last dollar on my last day sort of approach. And you might say, well, wait a second, isn't that similar to that sustainable withdrawal method, that first one? Yeah, but the sustainable withdrawal method looks at a wide range of outcomes and statistical probability and so on. This is just, all right, I'm 60 and I assume I'm going to live until 85. And so I've got 25 years with this money. How much of it can I withdraw to have the entire portfolio emptied by the time I'm 85 or by the time my life expectancy? Most people don't want to do this, but this is another approach. Assuming just no interest. I mean, you could take this 4 million, divide it by 25 years, it'd be about 13 million a month, assuming no interest. And you probably would take a more conservative investment approach if you did this, because you're going to be withdrawing so much and you just want to make sure that those dollars are there. But assume, taking a lower level of risk, that you're able to get a 5% return on those dollars. And a 5% average annual return over that time. Doing that financial calculator math, a $4 million portfolio for 25 years, where it's zero 25 years later. But if you're averaging 5% a year, that's about $23,000 a month. That's almost 30 grand, or excuse me, 300,000 a year in income that you could draw, or withdrawals that you can take off of your 4 million. Again, this means that, yeah, if you happen to live to 86 or live a little bit longer, the portfolio is emptied. But this is another approach to take on the lifestyle of that $4 million portfolio. So which approach is right for you? Whether you're nearing retirement or still have a lot of years left in your career, which approach makes the most sense? Because that's what you're going to want to plan for into figuring out how much should you be saving, your investment strategy, and so on. So what's your approach? Work with your certified financial planner on that. And then second, what's your tax strategy? Because going back to the sustainable withdrawal method, $12,000 a month tax-free is very different than $12,000 a month where it's all taxable, right? Just like as ordinary income. So your tax strategy is significantly important. Make sure you're doing tax planning and have tax diversification. And then finally, your investment portfolio, both throughout your career as well as throughout retirement, that's going to play a big role in what's possible with your portfolio. That's the fifth factor of those 5 factors. How much risk are you comfortable taking, both with your investments, what are your strategies during your career as you're saving, but also in retirement. So work with your certified financial planner on that, whether 4 million is the goal or something very different than that. Work with your CFP, build out your retirement income strategy for your specific situation. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us here as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.